Hey, what's going on, everybody? Welcome back to Mr. Bagel's channel for trading update and analysis. There are so many things we want to talk about today, and if you do enjoy today's content, please make sure you subscribe to the channel if you haven't already. Like the video because every day we put up a lot of information that you don't want to be missing out on. Alright, so two things we want to talk about today, that one of which is some of the trades I made in the last 2 weeks and how I was able to spot the opportunity and what kind of evidence I was looking for and how you could be doing the same thing. Secondly, I want to talk about the current state of the market, some weakness I see in certain sectors, and some strength I see in other sectors. Alright, so let's talk about those things. One of the trades I did in the last couple of weeks, I did ARM. I mean, of course, everybody knew that ARM had a pretty decent run in the last couple of sessions, and you can say, hey, Mr. Bagel, it's so easy for you to be speaking about ARM in hindsight. What did you do? How did you find out? Okay, here's what. The first day of January, at the end of every month, at the start of every month, you always want to be looking out for the monthly chart. How did it close? Just like every week, the end of the week, end of Friday, start of Monday, the first day of the session, you always want to be looking at the weekly close. So, and especially for, I know not a lot of people do this, but some people actually also use, actually I should say a lot of people do use this, especially the institutional players. They use 3 month chart. Um, there's not a lot of backtests you can be doing on ARM for 3 month chart because it is a relatively new company as a public company for ARM. So there's not a lot of read. So you see this kind of higher high and a higher low on the increasing volume, like rightfully so. The next one will be making another higher high. But we don't want to be trading this because the risk reward is not there if you're just chasing the high, right? I mean, your exit strategy has to be really, really good. Otherwise, it can really blow you up. So what we want to look for is the weakness in selling. If because the analogy I like to use is if it doesn't go down, it must go up. If it doesn't go up anymore, it must come down. So it went down and down again. What do you see? Decreasing volume. So down, found very strong support just a little bit below $100 point, and so down. Do you see a lot of buyers? No. Do you see less sellers? Yes, you do, because we failed to make another lower low at $96 and also on a decreasing volume. So the open of the next candle went up from 125 all the way to $150 in just a matter of days. So because for 3 month chart it is relatively this is very special because at the end of December, March, June, September, you always want to be looking out for this because if the story align with 3 month chart, 1 month chart, weekly chart, and daily chart, that is your super A plus. So I know some people that only take a trade like every 3 months. When all these things align, then they take a trade. Always remember the quality of a trade is always more important than the quantity of your trade, right? I used to make more than 5 trades a day. I even over traded. I allowed myself only 5 trades in the day. I traded 8 to 10 times. So obviously that wasn't the best time. I'm sure a lot of traders going through the same thing, and even the professional trader have gone through the same thing at their in their early days. But that's not how you trade. You can be making 1 trade a month and be insanely profitable. Always wait for your setup. Now, going back to ARM. 1 month chart, what did you see? Yes, lower high and lower low, but not quite for this one because we did take out the previous high even though we sold down. But volume was on the decreasing side. So monthly is good, 3 month is good. Let's talk about weekly, right? Big red candle down and then the doji on the decreasing volume, and then the lowest point was 123.26, and then 123.11. We broke down the support by a little bit, but remember, we still pretty much held up on this entire level. So what do you see here? Weekly weakening, selling pressure, good monthly, good 3 month, and then sure enough, the opening of the first day of the year, it went up. Guess what? Higher highs and higher low, close above 200 days moving average on increasing volume. The next day we did the same thing, and then again. So I already took out all my arm position just because we obviously found resistance at $150 level. That's the call wall. That is not a sign that tells you, okay, this is it. Arm has done its move. We should not be expecting anything more. Now, I think ARM is going to move higher from here, but maybe at the short term, there's there can be some choppiness, because I think what really will be required for ARM to be closing above $150 is going to be depending on the market, right? Obviously, we see crazy strength coming out of AMD, Nvidia. These are all factors that can help push ARM further. But again, we want to be mindful of the broader market because if the market is going to crash, I'm not saying that it will, but currently we do see some weaknesses. So let's talk about the futures market. You don't always keep a good habit of tracking the futures market as well because the futures market, it does matter. It does matter because sometimes, well, if the market is going to open gap up or gap down, taking out any support level or any resistance level before the market open, that's the futures market, right? Before the close of the day, check your S&P, check your Nasdaq, check your Nasdaq futures or S&P futures and some of the major stocks because like if we're talking about big tech, a lot of time they have the very similar setup going into the next session. So you can just have a pretty good, idea of okay, if they all look the same way, the market looks the same way, what will be the move going forward the next day or after that. I mean, we can never predict, but it can provide pretty useful information. So what do we see here? On NASDAQ, well, we obviously knew there was a trend line. That was the high, the second high. We broke out. Well, what do you see here? Higher high, higher low, increasing volume. So, are we breaking out this resistance trend line? We don't know yet because at this stage, if you really want your edge to be working, you want certainty. I don't know if there's any certainty in this market, but you want to have more confidence. I wouldn't be trading it here. Why? We don't know whether this is going to break because this can go like this, breaking out the trend line, found support retest, and make all-time high. That's a possibility. We do know there's some major economic data coming our way that can really set the tone for the market in the next couple of weeks. But looking at the technical, you really don't know what the move will be because we can also, this could be a fake breakout, grabbing all the liquidity, and the market will just continue to sell, make another new low. Is that a possibility? Yes, it is. So what am I gonna do? I think if you're not a day trader, if you're a swing trader, if you're an investor, you want to look out for, I guess, what I would say is the weekly close. So obviously, found very good buying uh, last week. I think this is gonna be relatively well because even if we close the week red, as long as we're still in higher highs and higher lows and decreasing selling volume, then we can say, okay, the market is ready to go higher from here, potentially even breaking the upward trend line. So that's a possibility. Right now, I mean, making a trade is more like a gamble because, okay, I'll say this: it doesn't necessarily have to be the weekly close. If you see a red candle like this, close like this today, on very weak volume, you can say, okay, after the rejection on the trend line, the market was not able to push down any further, and then it will just be picking back up. Maybe another retest on the trend line, and then eventually breaking above. The thing that you don't want to see in this market right now is that if we close this one, you know, below 20 days moving average and very high volume on the red side, then that's not good. Or a very weak doji closing in green and very weak volume, that's also bad, right? And it's not just the futures market. If you're moving over to S&P futures, you see the same thing. You're moving over to SPY, you have the same story over there as well. Let's see. Hmm. Yeah, it's the very same setup. Obviously higher high and higher low and very good volume. That volume doesn't really tell you anything because there have been a lot of buyings on this candle, also a lot of sellers. We did close above 20 days moving average, so right now you can say it looks pretty good. You can say it looks a little, you know, worrisome. So that's why we don't have a lot of REIT right now. I wouldn't do anything. I will wait for at least the close of today, or to be on the safer side, the close of the week to be making another trade. So right now, if the market's gonna stay choppy, there will still be some sectors that you can take advantage of. Like if you're a bull, there are still some other sectors that can still outperform if, even if the market is in consolidation. And the same is also very true for the downside. Let's talk about those downside. Eli Lilly, I saw some put last week and it printed very nicely because I was purely just doing this, man. Like, okay, found support, close green, higher highs and higher low, pretty weak selling, and then Friday closed very good. Now I have no position in Eli Lilly, but right now it looks like it wants to make new low. This is the high, another high, just a bunch of very weak buying, and then open at 20 days moving average or just so down. Again, we want to be looking at multiple charts. I mean, so okay, you want to pay attention to this. This is higher low with declining volume. Is that a signal to go long? Okay, you want to be very careful about this because look at this. The high was 847, 846. You can basically say, yeah, this is also lower low, and you can also kind of go out on a limb and say, oh, that's the resistance, right? Found it down. We found again and down. We didn't push down that much as we did previously. You know what? If the market gets down to this point, I think that's a very sweet level. But Lily is not looking as strong as we might have wanted it to be, right? That's your monthly. And what about weekly? So weekly is really, really bad because we made lower low and lower high. And look, we didn't even manage to hit this weekly moving average, even though on the increasing volume. But remember, we pushed down first and we bought back up later. So you have to know that, you know, a big part of this volume were actually sellers and not buyers. Now, the low point on this weekly candle was 764.3. Right now we have 763.35. So it's really weak, right? It looks like Lily wants to go lower just because uh we made a new low on this. Buying is very weak on weekly, also very weak on daily. As soon as we opened at 20 days moving average, we sold down. So how can you be playing this? I think the first, I think we're basically closing the gap over here. You can expect this gap to be closing as well. So the first take profit zone could be at $728 if you're going short on this. Second profit taking would be, just anywhere below this support level, $711, potentially even hitting $700, and that would be a pretty good buy zone based on what we just saw on the monthly chart. So yeah, this can potentially be a very nice short. If you are a little bit more conservative, you can wait until we took out this low and bought back up on very weak volume and then just sell down again. All right, because at the current stage, I don't think we can be taking out 20 days moving average very soon, just because the market is not really giving us that kind of opportunity. So Lily can be potentially a short. Also, I just remember, um, we always want to talk about the VIX that we mentioned in previous videos. So what do we see here? Well, VIX is not looking well. MACD just turned red, so that is telling you that hey, the market is actually pretty strong. On weekly as well. So I think the close of this week is really going to provide us a lot of information. You see this consolidation. If we have the same consolidation, VIX can go up again. But if we manage to close like below 15 on the VIX by the end of the week, I think also you find the same kind of strength on weekly chart for S&P and futures market and also Nasdaq. That can be your ultimate signal to go long next week, but we have to wait and see. All right. Microsoft. So before going over to Microsoft, I want to talk about Meta just a little bit because they had the very similar setup. Let's go for Meta. Let's talk about the daily, right? I didn't make this trade. I probably should have, but I'll show you how you can find the very same opportunity again going forward. And we do have one happening today. So stick around. Down, up, down. We obviously didn't take out the previous support. So these would be called the no trade zone. Because you don't know. Okay, we made all-time high, which is declining. We saw no green candle. We want to see a green candle first. Rejected on the 20 days moving average. Oh, huge volume. Now, if you want to go long here, I mean, that would be pretty ballsy. You can. I wouldn't. I would at least wait until the next day we found support on 50 days moving average. Going from there, then I will probably enter the trade over here. And remember, we don't have a structure yet. So it's very hard for you to set your uh, stop loss level and also profit taking level. Excuse me. So this would be a day trade, guys. This would not be a swing trade. And sure enough, it went back down to retest to see whether this structure can be working. Now, this was with the highest volume in a very long time. On the bullish side, that is. So again, we want to wait for the weakening of selling pressure to conclude, hey, there's no more sellers in the market, then we can go long. This is your A plus setup on the daily. Higher highs and higher lows close the doji and weakening selling volume. Also associated with the crossing of MACD and also BX turn from deep red to light over here as well, then you really wanted to go long the next session. Um, Typically, I would just enter my position right before the close, but you can wait until the open as well because market is always going to be giving you opportunities if you're patient enough to wait for it. Open gap up, retest down, you can buy here. It just goes all the way up. How would you know where to buy? Well, at the open, I either use 2 minute or 5 minute chart, but I think 10 minute and 15 minutes are the most powerful. See down and down, weakening volume, and wow, this one closed pretty good on the green. Then you can just enter there, right? So what I'm also seeing is Microsoft going into the session with a very similar setup. Okay, um, I rarely use like 10 minutes and 15 minutes. I only use them when like daily, weekly, they're all looking good, they're all aligned with each other, providing the same story. Then I want to open my trade at the best level possible. Then I going over to the smaller time frame to make sure that even the smaller time frame have stopped selling. Then I enter my long trade. Right? That's the only cases that I would use. Anything less than 1 hour chart. Okay, don't use like 10-minute charts solely. If you're really good at scalping, you can go for it. But for a swing trader, you always prioritize on these larger time frames. Now let's look at Microsoft. I mean, obviously weekly was okay. It was not the best. A lot of sellers, but for the time being, it looks like we just found support on 20 weekly moving average. If this is how we close the week, brilliant. But if we take out the previous low, this this structure is invalidated. Okay, so looking at the daily, what do we see here? That's basically what we saw with Meta, right? Higher highs and higher low, but not as good as Meta just because the volume on yesterday's session was actually pretty high. Um, so that's why I wouldn't just open a new position right before the close. I would wait to see how it develops today in the next session. If we open pretty much flat or slightly gapping down or up, found support on one of these daily moving averages, just like a little bit, similar setup as Meta, I will go long from there. Because right now we're still holding still higher highs and higher low, respecting the same trend line above 200 days moving average. If you want to go long on this, I would say the stop loss will be when Microsoft closes below 200 days moving average, right? And your first take profit zone, I mean, obviously there's supply here, you can take one here. If somehow we reject it and then found strength going up from there, you can set your second price target at this high here or even above it. All right, but that's largely dependent on the broader market, the VIX. So I think the best thing you can do is to sit on your hands right now. If there's really one trade you want to take, you can go long on Microsoft. Maybe looking at Eli Lilly as a potential short. ARM is still doing good, but we can expect the stock to take a breather. Um, Going forward, I think the weekly close will provide us with more evidence on how ARM and all the other semi-name will move. But for the time being, just because VIX, um, yeah, we don't know how that would how that's gonna move. The only thing we can do is if you are patient enough, wait for the weekly close. If you really need to trade, you're a day trader, scalper, wait for today's closing, and then just make sure you also know that some sectors, some names are still in trouble, some are making pretty decent move to the upside that you don't want to miss out on. All right. And once again, this is not financial advice. I'm just providing you with some of the information, what I see in the market, some of the opportunities that you can possibly be taking, because this is all just an educational piece. And once again, if there's any question at all, leave a comment down below. I'll be very happy to walk you through any trouble, any questions you may have. All right. And that's a wrap for me. Once again, thank you so much for tuning in. Happy trading. I will see you again tomorrow. Bye now. Hey, what's going on, everybody? Welcome back to Mr. Bagel's channel for trading updates. Hey, what's going on, everybody? Welcome back to Mr. Bagel's channel for trading updates. Hey, what's going on, everybody? Welcome. Hey, what's going on, everybody? Welcome back. Hey, Hey, what's going on, everyone? Hey, what's going on, everybody? Welcome back. Hey, what's going on, everybody? Welcome back to Mr. Bagel's channel. Hey, what's going on, everybody? Welcome back to Hey, what's going on, everybody? Welcome back to Mr. Bagel's channel for trading update and analysis. There are so many things we want to talk about today, and if you do enjoy today's content, please make sure you subscribe to the channel. Hey, what's going on, everyone? Welcome back to Mr. Bagel's channel for trading update and analysis. There are so many things we want to talk about today. And once again, if you do enjoy today's content, please make sure you subscribe to the channel if you haven't already. Like the video because every day we're putting out a lot of information that you don't want to miss out on. All right, two things we want to talk about today. One of which is some trades I took in the last couple weeks and how I was able to spot the opportunity, what evidence I was looking for, and how you could be doing the same thing. Secondly, I want to talk about the current state of the market, some sectors that I see weakness and also strength in some other sectors. So let's talk about those. So in the last couple of weeks, I you can say, okay, Mr. Bagel, yeah, everybody knows about ARM, all right? It took off. It's always easy for you to be speaking about this in hindsight, but how did you find out about this? So here's how. At the beginning of every month, you always want to be looking out for the monthly close, right? And especially for, I don't know how many people are doing this. I'm sure a lot of people are doing this, especially the institutional players. They also look at 3 month chart. So at the end of December, March, June, September, you always want to be looking at this. I mean, you don't have a lot of these on ARM right now just because it's a relatively new company. I mean, a relatively new public company. So higher highs and higher lows, and then sure enough, the next candle closed out, taking out the previous high. You don't want to be doing this just because the risk reward is typically not there for you. You want to be going long after the conclusion of selling pressure, right? The weakening selling pressure, right? We made higher high and higher low over here. Obviously, found very good buying just below $100 point, and then the next candle, obviously we're not able to push the stock down any further. So two candles in a row, decreasing volume, and sure enough, the start of the next candle, it went from $125 to $150 almost instantly. So I was looking at this 3 month chart, which is very closely associated with the story we're also looking at monthly. This monthly chart, we took out the previous high and also three candles down on decreasing volume, right? That's the first day of January. We are seeing all these things. Maybe even moving over to weekly. A big leg down over here, and then a doji weakening selling, and then we open up the next week, and then sold down a little bit, found support at the very same level at $123, and then the monthly chart opens up. 3 month chart opens up. It just went from there. All right. Weakening selling in weekly and also monthly and also 3 month chart. That is your ultimate setup. A plus. Okay. Like your trade, I know a lot of people try to trade every day as their day job. I mean, you don't really have to, because the quality of your trade is always going to be more important than the quantity of your trade. You can be waiting, sitting on your hands for 3 months to just make this one trade, and you're pretty good for the year, right? Down, down, close below 200 days moving average, higher highs and higher low, close above 200 days of moving average, higher volume that is, and then we made another high and another high. And I'm officially out of position just because we obviously found resistance. That is the call wall for ARM at $150. I'm not saying that the market is weak. I'm not saying that ARM is not ready to make another high above $150. I think it will, but in the short term, I think we want to take a little bit of a breather because we had made such a significant move. Even though monthly is good, 3 month is good, everything looks good on ARM, we still have to respect this. Hey, after such a run, I mean, we made like 10% gain the previous session, and then just 4.49% the session after that. We have to expect a little bit of weakness in the short term. But that is not to say ARM is done from here. I do believe it can make another new high, okay? But definitely not right away. The current state of the market, we always want to be, again, you want to look at VIX, you want to look at S&P and NASDAQ, both obviously the futures as well, because again, whether we're going to have a gap up or gap down, on different level is largely determined by the futures market. So every day before the close, I look at the futures, I look at VIX, I look at SPY, I look at NASDAQ to really get a sense of, okay, how next session could potentially be, moving. And that's going to help me with my decision making based on some other sectors and some other individual names. Some names that can really be affected by the broader market, then I can really make an informed decision based on that. Look at VIX. Weekly, we don't know how that's going because the kind of weekly you really would have liked was, back in May, this 2024. That's really good. But what does that tell you? Okay, lower high, I guess that's a good thing. But remember, VIX, BX is still pretty good. What I mean by pretty good is that the VIX is not crashing just yet, right? I think the current stage of the market, you really want to be looking out for, okay, I will wait for the weekly close on the VIX, on the SPY, on QQQ, on futures, just because right now we don't really know how things are looking. There's a lot of noise right now. If you are conservative, you want to wait for your A plus setup, I wait for the weekly close. But if you really have to trade, you want to be trying scalping in the next session, I would say still wait for the close of the next session. Because right now, if you're moving over to SPY, this is S&P future. Sorry, this is SPY. Obviously, that was the high, this was the high, and we tried to take out this level. We don't know what will happen. Obviously, higher high and higher low, but we see the volume really creeping up during the last session. And if you also want to be looking at S&P future, you see the same thing. You want to look at NASDAQ future, you also see the same thing. So now you see two candles back to back, higher volume. Are we gonna break out from here? It's possible, but I would wait for it because once again, the weekly was not as good as you would have hoped because we did take out lower low, right? And the high, I mean, this is a downward channel from what we can see, but the volume is also very good here. So what does that mean? I mean, I don't know. I don't think anybody knows. But what we can do now is to patiently wait for more evidence before we make our next move. So if we close the day like this on future, that's really good. You know why? Because we found support on this trend line. Also, if the volume is relatively low, we can say, okay, there's no selling. We retest on the trend line, but the sellers are not here to push down the market, we can just buy from here. And we can potentially be making higher high. We might be breaking out and then retest and then go from there. But we can also be crashing from here. So you don't want to be looking at like a doji in green, very weak volume that is telling you that there's no more buyers in the market, and you can just retest down to 20 days moving average, 50 days moving average, and potentially down to test the support. If it breaks, just be prepared to have more downside in the coming weeks. Um, or you can look at this if we found support on 20 days moving average and close pretty good with a wick, lower volume, then that is also another signal to probably go long from here. All right, so right now the market doesn't really tell us what to do. We have to wait until the close of the next session, and more, it would be better if we can wait for the weekly close, because that's what we like to do, because weekly close definitely says more about the daily close, right? Some weakness I see in the market, I see Eli Lilly. All right, actually, last week, you found support, turned green, higher highs and higher low, very weak volume. I sold the put, and sure enough, Friday was not bad. But again, the market can turn from bullish to bearish in just a blink of eyes, okay? It can happen really quick. It happened today. Eli Lilly opened just right at 20 days moving average and sold the F down. This is really, really bad. This is a very bad close, right? I mean, lower high, you know, still in the bearish market bias. I mean, if again, we always want to look at a larger time frame, and you go, okay, higher low with decreasing volume. We're talking about Mr. Bagel. This looks pretty good. No, hold on. Just hold your horses. Because the high on this candle was 847. The high on this was 846. You can even go on a limb and say, hey, that's resistance. Yeah, we got rejected once again. So, rightfully so, it should go down. And even if you're looking at weekly, I think you get something very similar, because this is lower high and lower low. I mean, even the volume was pretty high. It was actually made up of a lot of sellers. Pushed down to make lower low, bought back up, couldn't even retest on this weekly moving average, right? So Lily is weak. Um, I think the market is either gonna make a large move. If it does, hedge your position, or not if we do break out above the upward trend line. But if the market stays choppy, there will still be some large move in some certain sectors, and also some individual names. Another thing I want to talk about, so Eli Lilly can be your potential short. If you want to use any certain level, I would say Eli Lilly. If we make another new high above 811, you definitely want to get out. If we make another new low, which is good because we have already closed this gap, but this gap is yet to be closed, right? If you're more conservative, you can wait for Eli Lilly to break the support, retest back to the upside, but very weak volume, and then you can just enter a short from there. First profit taking level will be here, closing this gap around $730. And then second profit taking will be at the previous low, which is around $711. If Lily does hit $700, I think that would be your pretty sweet spot to go long, because that would be associated with our monthly moving average around $709. That would be a very sweet level. All right, just patiently wait for that. I do expect Lily to go down to test that moving average and potentially be met by bull demand. All right, that's just my 2 cents. So Meta um, didn't take this trade. I definitely should have, because I saw it. What happened here? After making all-time high on Meta, it just went straight down without any green candle inside. This is not where you want to trade. You can, if you want to, the open of the next candle, test 50 days moving average, you want to go long from there, that's okay, but we don't have a structure just yet. If you want to do that, make sure you're doing scalping, you're not doing any swing trade, because we are not having that structure. Give it time, be patient for it to develop, went down, and then this is a very nice green candle because this is of the highest volume in the last 2 weeks or so. But again, we always, urge people to go long after the conclusion of selling. So you wait for this. Try to push down, got bought up, lower volume, higher high and higher low. This is a beautiful doji, and then the next day you just go up. Well, what I would have done was probably opening up a position just right before the close, because obviously we already know the way we might close, and the next day is looking pretty bullish. But also, market is always giving you tons of opportunity. Even if you didn't do that, you can still wait for the market to okay open up, push down a little bit, and you buy from there, right? That's when you can really consider using smaller time frame. Open back gap up, very weak buying, and then down and down, decreasing volume, and then we found support over here, turn from red to green. You go from there. All right, very easy setup. So yeah, ARM was a beautiful trade and very easy for you to replicate as well if you know the kind of time frame you should be using, the kind of structure you should be looking at. Also, combine that with VIX, the broader market, and also the sector, then things would just seem very clear for you. All right. And once again, this is not financial advice. I'm just providing you with what I see in the market, some potential opportunities that you can consider taking. Um, so yeah, right now there's not a lot of read, and I will provide more information when I do have them. And so for now, happy trading. If there's any question whatsoever, make sure you leave a comment down below. I'll be very happy to walk you through with any trouble or situations that you're having. And so yeah, that's a wrap for me. Happy trading. I know there's a lot to talk about in the next couple of sessions. Major economic data coming soon. And when they do, we will notify that in the channel and also on our X account. Thanks again for tuning in. I'll see you again tomorrow. Have a good one. Ciao. Hey, what's going on, everybody? Welcome back to Mr. Bagel's channel. Hey, what's going on, everybody? Welcome back. Hey, what's going? Hey, 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 what's going on, everybody? Welcome back to Mr. Bagel's channel for trading updates.